Hello everyone, my name is Jordan and in this video we are going to talk about the volumes indicator in MT4. Now I have prepared here a very short presentation for you. I hope it will make it absolutely clear. If not, of course, you can always use the comment section below this video. Either me or Vlad is going to reply as soon as possible. Now let's begin. Okay, let me just put it here. Fine. Now, what is the volumes indicator, guys? The volumes indicator is showing us, and this is really important here, how many times the price changed during the given time frame where we're currently sitting. Okay, that's the idea behind the volume. If you're thinking about volume in a traditional way, where volume could be measured as in the stock market, for example, where we can measure the contracts and so on, this is not the case. This is really important. So let's go ahead and repeat that again. We have Euro-dollar 15-minute chart. Currently, on this bar, right here, the current bar, we see that volumes shows 5. What does that mean? That means the price during the time passed. So let's say this bar opened, I don't know, 3 minutes ago. That means the price changed 3 times during that interval of 3 minutes. Okay, it's not contracts, it's not a real volume as we have in stocks or any other market which is measurable. This is price changes. And why is not possible to measure it? Because we don't have a centralized market where we can go ahead and say, okay, that many volumes got in for buys, for sales, whatever it is, right? That's the reason behind it. Now, going further, how to read the indicator? I took a screenshot from the platform, and this is the default which you're going to get when you install MT4. You have bars, okay? The bars are represented again by default colors with red and green colors. Green would mean the preceding bar was less than this one and the volume here is increasing. Red would mean the preceding bar had more price changes or bigger volume and that's why it's decreasing. Simple as that. Moving forward to the next one. What are the key features of the volume indicator? In other words, how can we actually use it? Before we move on though to the key points for this indicator, I want you to read this sentence and ask yourself this question. What does it mean when we say the price is changing? Okay, read it and please leave your comment below answering this question. I would like to see how people understand the concept behind the volumes indicator in MT4. Now back to the key features. I personally use it these 3 ways, or in these 3 methods. First of all, it's absolutely ideal when it comes to identifying false breaks. Okay, then when we see a rising volumes, that means we're looking at growing demand. The prices are moving. That's not always the case, but I'm going to give you examples of how exactly I'm using it this way. And then we have the third one, which is extreme volume readings, which in other words means the price was moving in a regular fashion like this, on average, of course. We always have averages, and then suddenly we see a spike and then the price continues to move. When we see such patterns, very often we will be able to identify reversals or pullbacks that are going to follow up after this kind of pattern. Let's call it a pattern. Now let's break down the volume. Volume is again probably the second most important part, because always what we should be looking first is the price action. Price action is the king. It gives us more than enough to trade. I personally know many traders, I'm sure you also know traders who make money using price action alone. Okay, so I'm not going to be the person who says volume is more important than price action, but it's a perfect combination when we say volumes and price action. Okay, so large volume signifies that there is a large number of market participants, and again, what was the definition? Price changes. So if there are many participants involved, that means we're going to get bigger volume readings in terms of a bar. Okay, so let's continue reading here so we don't miss anything. Including financial institutions, the last ones bring the highest turnover to the market. And if they're trading, here we're talking about smart money, right? We're talking about hedge funds, banks, central banks, commercial banks, anyone in terms of institution who is dealing with big money is creating these volumes, guys. And when we're talking about these guys, the smart money, this is where we see the real market moves. Okay, so what we can see here is that if these guys are involved, it means we're going to have moves. Okay, so vice versa would be for a smaller volume. Tells us that there are very little participants in the market. Neither buyers nor sellers have any significant interest in the price. In addition, no financial institutions will be involved. Thus, the market is going to be dead, basically. Then this is the time when we see very tiny moves. This is best seen, for example, during night ranges. Okay, the big guys are not involved for this specific currency pair, and you see this. Then the morning comes, the market opens, and you start seeing moves. So by reading small volume, just imagine these night ranges and you will be able to understand what we're talking about here. Next, we are going to actually see how we can use it. First, we're going to cover volumes and trends. Now that might be obvious, guys, but let's still go ahead and cover it. As the price is moving higher, let's say bullish trend, we want to see volume which is increasing. Okay, when volume starts to decrease, we're likely to see pullbacks or reversals. Same thing applies, of course, for the down moves. So basically, price is moving in a trend, we see volume is increasing as well. That's the idea. When there will be pullbacks or reversals, we're going to see the volume decreasing as well. So let's go ahead and check out a few charts here. Now this is a downtrend, obviously, the blue arrows covering this part, right? This is a downtrend, but what we can see here is that the volume is also decreasing. That gives us the idea that we are either going to see a pullback or a reversal. Simple. Anything you're learning, I think in general, not just in trading, you should try to simplify it, guys, as much as possible. Break it down into smaller pieces, okay, that create the bigger picture. Okay, take all the pieces of the puzzle, put them together. But if you know how each of these small pieces works, then at the end you see the full picture. Otherwise, you just see some gibberish inside which you have no idea how it works. Then after the first clue that we're going to see pullbacks or reversals, we start to see the price jumping up. This is, of course, the very first clue. And then the volume that goes behind the price is also increasing. That gives us the idea that this is indeed a reversal pattern here, rather than pullback. Okay? So following the price up, volume increases, price starts to go lower, volume decreases. And then again breakouts, and we can see the volume started to increase again. Right? So it's not going downwards like this, for example. So that's basically one of the ways to try to read the trend in combination with volumes. Volume increases along with the price trending up or down, means very likely this is a strong trend, we can buy pullbacks here. Then you have the trend at the end, volume starts to decrease. Less and less price changes, which means less and less participants are interested in that bearish move. That's all. Let's go ahead and see another example. This time we have dollar cut the daily chart. You can see what's happening here. Price started to move lower, lower lows and lower highs are being formed, and during that time the momentum is expanding. Okay, that's the idea telling us, that's the thing telling us we have a strong trend. During this pullback then we can see small drops here, okay, and then the price starts to move lower again, continuing to grow in terms of volume. That's all. I think you should be getting the idea already. So ready to move on with the next one. Here we're going to talk about reversals when it comes to volumes. When we look at the volumes indicator, we can easily identify spikes. So you have this and then spike and then this, and then regular bars, spike and then small. Okay, this is what is meant here by spikes. This is where the volume increased significantly compared to the previous bars. Knowing how volumes are measured in MT4 and what they present, we can conclude that during these times of large volumes, spikes of volumes, there is a lot of interest from the market participants, whether this is going to be buyers or sellers. Taking this assumption and logic one step further, we can start identifying very strong zones of supports and resistances. Why does this happen? This is very important to ask yourself, why does this happen, guys? Imagine we have a trend and we're reaching, I don't know, monthly pivot or very strong resistance. For some reason there is a level or a place where people are interested to go long now or to cash out their sell positions that were open right there. So this is where we start to see increase in the volume, because the price starts to chase this level, because many people have targets here or many orders are waiting. Imagine you have pending orders here waiting to be triggered from that zone. And here, of course, we are not talking about retail traders who are moving the markets. We're talking about options expirations, we're talking about institutions, robots, whatever it is from the big guys that is moving the price towards this level. And that's exactly where they leave the print on the charts by volume. Okay, so this is how we can start identifying these amazing levels of supports and resistances, and later on we can of course go ahead and use them. There is a very nice indicator coming from a web platform I'm not going to tell the name, of course, but they are using something called volumes profile. And this is exactly the idea of the indicator. You see where there is concentration of orders, okay, where the action is happening. What is the hottest bar in the town? Okay, this is where you're going to find most of the people. This is where you're going to find most of the sales for alcohol, cocktails, and whatever else, right? That's the very same idea. We're trying to identify these hot spots, but not in terms of bars or restaurants. We're trying to find them on the charts. Okay, now let me give you an example here. This is pound yen daily chart, and the price is moving lower. And then we start identifying these huge spikes in volume. Another one here. Okay, this one is not that much bigger than the previous one, but it still stands out when you look at the chart. Okay, we have one here as well, pointing upwards. So basically what we can do and the way we can use it now is that we can go ahead and say, okay, since there was some crazy action here, this is probably a good support and resistance zone. And when you look left, you will see that indeed the price stopped 3 times at that zone, tried to break, created a false break, and then it pushed higher again. Same thing is happening here. Price pushed higher, created that huge bar in terms of volume, and look where it stopped, right at the previous breakout. What's happening here? Just imagine for a second a theory like this. We have a breakout. We've never retested that breakout zone. We got close to it, but we never actually retested that low or this specific zone. And then we're going to this place, which means breakout traders collected their money, volume is dropping as we can see, and now the price is pushed higher. Okay, so once we go ahead and reach that place, many people start either selling or cashing out their buy positions, and this is creating the action. And this is how we can identify these very strong support and resistance zones. Okay. Now, the next one would be about breakouts and false breaks. Basically, what we can do is, using the volumes indicator, we can identify whether the move which is happening here is going to be a false break or breakout. And when I'm talking about this stuff, guys, remember that whatever we're saying is never, ever, ever going to be 100% accurate. So if you're just stepping into the world of trading, forget about the 100%. There is 100% chance that you're going to blow up your account if you don't apply risk management and money management. That's the only thing I can guarantee you as a trader doing this thing full time. Anything else, when it comes to strategies, trading, patterns, chart patterns, whatever it is you can bring on the table, forget about 100% reliability. Maybe there are people in, again, coming from the hedge funds and banks who have some sort of strategies and ways to minimize risk, getting closer to this 100% profitability ratio, right? To always make money out of the given situation, but this is not the retail trader. I can guarantee you that for sure, 100% guarantee. So that being said, in other words, I'm trying to say, guys, when you see a video like this, don't just start blindly following something and opening 50% of your account in terms of risk and expecting it to work any given time. Okay, we have money management, risk management, as I mentioned before. All these are crucial parts when it comes to trading. Otherwise, you're just gambling, so you're better off to go to the casino and at least have some fun there. Breakouts and false breaks. Again, using the volumes indicator, we can increase the accuracy and profitability of breakout strategies. Again, I'm repeating, increase. Okay, not make them 100% accurate, increase the percentage. It is really simple and straightforward process. If we see increased volume during the breakout, chances are that this breakout is real and we have big guys behind it. We have real momentum which is going to materialize and we're going to see the price moving in that given direction. Okay? In a similar fashion, we can confirm a false break. If there is a breakout, okay, and this is your candle right here, bullish candle pattern, you see a breakout, but then the volume was higher and then it drops and it drops and it drops. Chances are this is going to be a false break. Okay, that's how it works. Now let's go ahead and see a few examples. Pound yen daily chart. Trend line, we're obviously in bullish momentum, and this is where price action and different kind of knowledge comes in play, but the purpose of this video today will be volumes. So we're not going to focus on the other things. We're going to focus on this breakout candle right there. First of all, we can see the price action. We said price action is always number one. Price action here shows a lot of buyers interested in this move. Okay, because you're going to see, for example, spike like this, but then candle like that or candle like that, which doesn't stand out when you look at the other candles. This candle is big one. It stands very good when you look at the average size of the other candles, right? This one is also one such pattern which shows a real strength behind it, and volumes in this case confirm it. In other words, combining price action with volumes confirmation during the breakout gives us a very good chance that this trade is going to work out in our to make money. Sorry, I lost the word here. Now let's go ahead and check out another example. Again, we have the pound yen and we have the same chart that was the previous one. We have ABCD pattern here, equal legs. Breakout is happening on this candle. Again, we can say the candle is relatively strong. It is closing above the trend line. It is closing above the previous high. Looks good in terms of price action. Love it. But when we check out the volumes below, we see that it's decreasing. Interesting. Why? Right? And that brings up the question, is this trade really going to work or not? You will see many times these conditions not met, meaning the volume is decreasing and yet the price is flying. And the question is, are you willing to take the risk when you have lower probabilities and your setup is not as strong as it should be, and trade it or skip it? I personally, as a very conservative trader, would like to skip this kind of situations. Okay, again, I'm not saying this is the only way or the right way. It is the more conservative way. That's the idea. So that would be all for this video, guys. I really hope that you enjoyed it. Again, reminding you, please leave your comments below answering the question from slide 2 or 3 was it. If you have any other questions related to volumes or anything else at all, leave your comments below this video and you will be replied as soon as possible. I invite you to go ahead and check out the Traders Academy Club. It is one of the best clubs you're going to find online, with really tons of educational materials, a lot of traders to talk to. We have dedicated Telegram channels where we discuss trading ideas during the day. And of course, you can join our free Telegram channel where me and Vlad are sharing trading ideas and more educational materials almost on daily basis. Of course, these links you can find below in the descriptions, and that would be all for this video, guys. Thank you for watching.